So, a lot of people really care about and focus on promoting mass Bitcoin adoption.
Others say just save. People get in at the price that they deserve.
And the fact is that we're still at the gradually, not so much the suddenly phase, and who knows when that will come. But our next speaker is Willy Woo, co-founder at Crest Fund, and his talk is titled The Long Arc of Bitcoin Adoption. Please give Willy a warm welcome to the stage.
All right, so my name's Willy Woo. Most people know me as the guy that looks into the blockchain ledger to read the structure of the market. This talk will not be on that. It will be tracing the long arc of Bitcoin adoption. So effectively, we're going to go from 1 user to 1 billion users through this, this talk. And I just want to convey to you all the sense of the speed and scale of Bitcoin's adoption. So let's get started. So as we all know, on the 3rd of January 2009, we had 1 user on the network, and that was Satoshi Nakamoto. He laid down the Genesis block, and that was Bitcoin's 0 to 1 moment. So this network grew 10x in 8 days to 10 users, and then another 8 days to get to 100 users. So going to 1,000 users, it took 5.5 months. So just pausing here, we know this through the blockchain ledger. We can take all of the transactions that are on the ledger and we can forensically trace the addresses they go to, and we can cluster that into individual users based on their behavior. And it gets quite accurate when you go back 14 years. It takes, you get a good idea of it within 30 days, 2 years, it starts to really solidify, and this is going back, of course, almost 14 years. And this work is done by my friends at Glassnode. So we're at 1,000, and at 1,000, a very magical thing happened. We had liquidity hit the market. So there was a marketplace called New Liberty Standard, and for the very first time, a user could come in and buy Bitcoin. They didn't have to install the software, they didn't have to mine Bitcoin, they didn't have to burn electricity, they didn't need to be a technologist. They just need to know it existed and to send money into this marketplace. So you can see in this chart, let's see if this laser works, doesn't? Okay. You can see there's a little kink in this chart when we're in our S's, and that kink is when Bitcoin's growth went exponential. So in a log chart, when things go linearly upwards, that's the exponential growth. So it took us 1 year to get to 10,000 users, and at that point, Mt. Gox came along, and we had our first global marketplace. So the first time in the world, anyone could send money to Japan, buy Bitcoins, and send it into their own wallets. And so the exponential growth continued. It went to 100,000 users and then to 1 million. The million took another 2.5 years, so the first 4 years got us to 1 million users on the Bitcoin network. So at 1 million to 10 million users, we kind of hit a bump in the road. Mt. Gox blew up. 1/8 of all Bitcoins in existence got stolen. And then we went through this protracted period where there was a governance war, where a group tried to change the code base for their liking. And Bitcoin went through that and proved that you couldn't just easily change the code base. So that was the fork wars, and it took 3.5 years to get through. The following 3 years got us another 10x to 100 million, and that went a lot faster. We had the 2017 bull run, and it's here we see futures markets start to develop, and the very first signs of hedge funds and institutions approach this asset class. So this takes us to where we are today, which is on the next 10x, which is going from 100 million to 1 billion users. And so this is the 9th 10x growth on the network. And so I'll just make a point here that now it's developed to a point where someone in the equities markets can buy Bitcoin via their brokerage account. That's done, spearheaded by Grayscale, where they launched the very first spot ETF, essentially. Americans can buy that through their IRA account, and also you can buy publicly traded equities that hold Bitcoin in their treasury, spearheaded by the work of Michael Saylor and MicroStrategy. So you can see the sudden growth of that in this chart here, of the yellow line. And then I'm adding this chart, which is some of the data that comes from our own firm. And what we're looking at here, that blue line, is showing just how much money a market-neutral trading firm can make by extracting inefficiency out of the crypto market. So they're doing arbitrage trades, and just even a year or two ago, they were making 100% north of 100% annualized, just pulling that inefficiency out of the market. So today, that kind of arbitrage trade, it's also in a bear market, is low single-digit percentages per year. So when you've developed this market that's immensely efficient, it's global, it trades 24/7, 365 days a year, it's set the scene for sovereigns to come in. So we've had, since September 2021, El Salvador pick up Bitcoin to be legal tender in their country. And so in the first 8 months of that launch, they reported 20% of their population using this wallet actively. And that compares to 25% banking penetration for that country. So it just really shows how quickly adoption can happen in a country if the government is for it. And of course, if you're right now, today, roughly there is 400 million users on the Bitcoin network. And so El Salvador saw its tourism jump 52% in that first year because there's a user community here that's supporting this network. So zooming out, this is what we're seeing now, is that we're on a growth trajectory here, and there's 4% of the world that is currently got exposure to this asset class. And so I've put it up against the growth of the internet and, of course, world population. And now, my favorite thing to do is to lay this all up on a log chart, and on the vertical axis, as we're climbing altitude, is actually this 10x growth. And so in this view, you can start to see the sheer pace of the growth of this network. And it turns out Bitcoin is the fastest technology the world has seen in terms of an adoption S-curve. It's faster than the growth of the internet, it's faster than the growth of mobile phones, of course faster than TV and radio before it, and the growth of electricity penetration. So this leads to a very, very surprising outcome, that we've got this 14-year trend, it's very reliable, and then we pan this forward 3 years, and we get to 1 billion users on the network. So 12% of the world population will be on this network within 3 years. So that gives you an idea of the sheer speed and pace of this network. It's growing very quickly, so we'll go to what implications that has. So we're going from 14 years now, and we're going to zoom out to a 10,000-year view, right? And so this is a tweet that I did, a slide, but it's a tweet, in 2017. And effectively, I said, the media call this drug money, the bankers call this a bubble, but if you're a technologist, you call this the dawn of the digital age. So really, we're tracing the arc of money through the ages, and really at 10,000 years ago, we traded gold, silver, cows, sheep to make our purchases. And that was in line with the agrarian age. And then when we had this big shift in technology into mass productivity, we moved to something a little bit more sophisticated. In the industrial age, it doesn't really make sense to ship sheep across a country to settle a trade, unless you're from New Zealand. So we moved into a gold standard. We traded paper backed by gold, and that actually decoupled from gold itself and became fully fiat in 1971. And so really, if you're a Bitcoiner and you're a technologist, what we're actually seeing here is the adoption arc of going fully into a digital era, into a digital age where money itself is natively online. And so one of the things that comes about from this kind of long arc is you see that the way we organize as a society changes. We went from hunter-gatherers and we moved into settlements, and kingdoms was the way governance worked in the agrarian age. And when we moved into a much more complex society, one with an industrial age economy, we actually had the nation state, which is kind of the era we're in now, but already we're seeing that start to change, right? So particularly in the last few years, we're seeing workers go digital, even if they didn't want to. They were forced over the pandemic. And now we're seeing digital nomads work anywhere in the world on a tourist visa. With this kind of digital age, it's very, very hard to kind of maintain a national boundary. The boundaries of a country become very porous. And now we've got a detachment from the nation state and the creation of money. So, and of course, this kind of money does not really see national boundaries. So while we're in this era where a lot of the news and conversation is about Bitcoin being regulated by the nation state, crypto assets being regulated by the nation states, you could also see it as another from another viewpoint. From this 10,000-year viewpoint, you could say maybe Bitcoin and crypto assets is actually regulating the nation state into something new, which we haven't seen before. So this is really the summary of that tweet, in a tweet in 2017, which is, Bitcoin is not just money, it's the invention of an internet-native programmable scarcity, and with that breakthrough, software will eat the financial world, but actually it's eating the entire world. But let's take a look at what that may look like. And so when you look at a new medium that comes about, it usually takes 20 years for that medium to find its full native expression. So, you know, when television was created, what we did was we actually put radio shows on TV. We just put radio shows with pictures on TV, and it took about 20 years for the sitcom to come about. And that was actually the native expression. This miniseries, all sorts of things sort of came out of this medium. And so again, when the web came in the 90s, we immediately threw on online brochures, newspapers, magazines, essentially e-zines, and it took 20 years for social media to come out, which was very native to the form of the web. So now we are in this sort of halfway through this journey of the first 20 years of Bitcoin, and already we're seeing the same thing happen. We're seeing traditional finance being put onto internet rails. So we're seeing currencies being formed, we're seeing decentralized exchanges, we're seeing lending products. But that's not where it's going to end. And I don't think anyone knows where this is going. This is probably the most exciting part of this journey, is that we don't know what expression this journey will take us into, but already we're seeing the ability to stream money across the globe as if we were streaming a YouTube video, right? That's something completely divorced from what traditional finance can do. We're seeing communities organized, DAOs being created, and new types of governance and new kinds of structures being formed, and experiments with NFTs, where these are things that we haven't seen in the traditional finance world, but already we're seeing something new come about. And we really don't know where that will go to, but you know, from what we've seen here is that this world is going to change very, very rapidly, and And it's coming very, very fast. In the next 10 years, we're going to go beyond 1 billion users towards half the world on this technology. And with that user base, with this kind of radical change in the technology, we don't know where we're going to, but it is going to be completely, completely different from what we've seen. So brace yourselves, and that's the conclusion of my talk. Thank you very much.